Happy New Year, everyone. As we enter 2026, three forces will shape the commercial real estate investment climate. The first is job creation. The second is interest rates and debt capital availability. And the third is the availability and deployment of equity capital. This week, I'm going to focus on the employment market only and how it could shape commercial real estate performance in 2026. I'll touch on the other topics in a later video. So, entering 2026, we're seeing a significant slowdown in the pace of job creation. In the first 4 months of 2025, before the tariffs were announced, the U.S. created an average of 122,000 jobs per month. Since May, the average job creation has fallen to just 17,000 new positions per month, with the bulk of the job creation in the healthcare field. This has put upward pressure on unemployment, which began 2025 at 4% and as of November stood at 4.6%. Now, the weakening employment market isn't just being driven by tariffs. It's a combination of policy uncertainty, reduced immigration to the U.S., together with outmigration, and the growth of AI, which is starting to boost worker productivity. As of the second quarter of 2025, the most recent data available, productivity was up about 5.4% compared to the beginning of 2023. So the job creation tailwind that bolstered commercial real estate space demand over the last couple years is beginning to ebb. Office space demand, which has made a slow but steady comeback over the last 6 quarters, is expected to taper. In 2024, net office space absorption totaled about 50 million square feet, and in 2025, it reached 85 million square feet. Our current forecast for 2026 is still positive at 65 million square feet. And we're forecasting positive office space demand in almost every major market in 2026. For retail, space demand is forecast to strengthen in 2026. Following 4 years of solid demand, absorption fell into negative territory in 2025, which boosted the vacancy rate to about 5%. We expect absorption to exceed 10 million square feet this year, but that will still fall short of the expected 30 million square feet of mostly single-tenant new development. As a result, the overall retail vacancy rate is forecast to nudge up by 20 basis points to 5.2%. Now, like retail, industrial space demand should get a boost from 2025 levels, reaching about 68 million square feet of net absorption. And although the pace of industrial space construction continues to taper, we still expect about 200 million square feet of new space to be completed this year. As a result, we're forecasting a 60 basis point rise in industrial vacancy rates in 2026 to a national average of 8.6%. The bulk of the impact will be on large format industrial warehouses in markets with significant new construction, but smaller infill and logistics facilities as well as smaller metros will likely continue to outperform. For multifamily, the slowing employment market will weigh on housing demand. The elevated unemployment rate among young adults between 20 and 28 years old will slow new household formation. But elevated home costs will reduce the loss of tenants into homeownership. The net effect will be apartment absorption of about 240,000 units this year, which still falls short of the 270,000 new apartment completions expected in 2026. That will push the national average vacancy rate up by about 10 basis points to 4.7%. Still, in 2026, we expect vacancy rates to decline in 31 of the 50 major markets we track. So, despite the anticipated sluggish employment market, space demand is expected to remain positive on a national basis for all 4 of the main property types. Some metros will outperform, of course, and some will lag. But should uncertainty abate, all types of commercial real estate could outperform expectations. And as I'll cover in another video, the commercial real estate capital markets are looking increasingly positive. As a result, the 2026 commercial real estate investment outlook remains positive with a potential for an upside surprise, which is why investors always need to keep their eyes on the horizon.